and gentlemen, good day and welcome to Punjab National Bank Q4 FY25 earnings conference call hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Palak Shah. Thank you and over to you, ma'am.
Hello everyone and welcome to Q4 FY25 earning conference call of Punjab National Bank. Today we have with us the entire management of Punjab National Bank headed by Mr. Ashok Chandra, MD and CEO, Mr. Kalyan Kumar, Executive Director, Mr. M. Paramasivan, Executive Director, Mr. Bibhu Prasad Mahapatra, Executive Director, and Mr. D. Surendran, Executive Director. With this brief introduction, I would like to hand over the call to Mr. Ajay Singh, General Manager, to read out the disclaimer statement, post which MD Sir will address the conference call. Thank you and over to you, sir.
Good afternoon, everybody. The disclaimer, this representation contains certain forward-looking statements apart from historical information. These forward-looking statements involve a number of risks, uncertainties and other factors that could cause actual results to differ materially from those suggested by the forward-looking statements. Punjab National Bank undertakes no obligation to update forward-looking statements to reflect events or circumstances after the present date. Thank you.
Good afternoon. I am Ashok Chandra, MD and CEO of Punjab National Bank. I will just give the snapshot of our performance for financial year 24-25. First, I will touch the business performance. Global gross business of the bank stood at 26.83 trillion as on March 25, with yearly growth rate of 14%. The global gross deposit stood at 15.66 trillion with a YOY growth rate of 14.4% and global advances stood at 11.17 trillion with a YOY growth rate of 13.6%. We are well above our guidance for deposit as well as the credit growth rate, which was 9 to 10% for deposit and 11 to 12% for credit. CD ratio of the bank is comfortable level at 71.28% as on March 25. Profitability performance, coming to the profitability numbers, the net interest income stood at 42,782 crores with a YOY growth of 6.7% for financial year 24-25. NII has reflected marginal dip in Q4 on account of immediate impact of policy rate cut on asset side. Our domestic NIM is at 3.08% for financial year 25, whereas the global NIM stood at 2.93%. We are in line with our guidance for NIM at 2.9 to 3% for financial year 24-25. The operating profit for the financial year 24-25 is 26,831 crores, which has improved from 24,931 crores in financial year 23-24 with a growth rate of 7.6%. Our quarterly operating profit is 6,776 crores, which has improved from 6,416 crores in the same period last year with a growth rate of 5.6%. The net profit for the financial year 24-25 is 16,630 crores, recording a YOY growth of 101.7% compared to FY23-24 at 8,245 crores. For the March quarter, net profit stood at 4,567 crores against 3,010 crores in Q4 23-25 with a YOY growth rate of 51.7%. Key ratios, return on asset stood at 1.02% for Q4 financial year 25 and 0.97% for financial year 25, achieving the guidance for financial year 25. Return on equity is 19.23% for Q4 financial year 25 and 19.33% for FY25. Highlights of our asset quality, bank has done very well under the entire NPA management and preventing the fresh slippages. As far as asset quality is concerned, our gross NPA has reduced from 5.73% in March 24 to 3.95% in March 25. Similarly, the net NPA percentage, which was 0.73% in March 24, has improved to 0.40% in March 25. Guidance for net NPA was below 0.5% for 24-25 and we have crossed that guidance. The PCR of 95.39% in March 24 was improved to 96.82% in March 25, which is well above our guidance of more than 95% for FY25. Total fresh slippages during FY25 was 6,761 crore and 3,001 crore in Q4. Our guidance for slippages ratio was to remain below 1% in FY2025. We are within the guidance and it is at 0.73%. The total recovery stood at 4,733 crore for Q4 2025 and rupees 14,336 crore for FY 2025. The credit cost stood at 0.21% for FY 2025 and 0.19% for FY 25, achieving our guidance of credit cost which is below 0.25 to 0.3% for current financial year. Capital performance highlights about our capital. As far as the capital is concerned, the capital adequacy is 17.01% as on 31/3/2025 compared to 15.97% as on 31/3/2024. During Q2, FY25, bank raised equity capital of 5,000 crore through QIP, which increased the CET1 and CRAR by 65 basis points, which has subscribed by 8.3 times. During Q3, FY25, bank raised Tier 2 bonds of 3,000 crore and the Government of India shareholding remains above 70%. Our CET1 as on today it is 12.33%, AT1 is 1.72% and Tier 2 is 2.96%. We have also taken the board approval for raising Basel III compliant AT1 bonds and Tier 2 bonds for 4,000 crore each. Highlights of our digital performance. Bank is doing extremely well in all the areas of banking, and we have improved lot of digital penetration in all the critical areas. The bank is focusing on building digital capabilities under the domain of AI, ML, and analytics-based business generation. The same has yielded tremendous results for the bank. 94% of the transactions are getting conducted in the digital mode in our bank. The number of activated PNB1 mobile app users stood at 2 crore 14 lakh as on 2.14 crore as on March 25 as against 1.74 crore as on March 2024. The number of WhatsApp banking users has grown by 115% from 31/3/2024 to 61.6 lakh as on 31/3/25. Sanction under the digital lending journeys were more than 23,169 crore and every fifth loan is getting sanctioned through the digital mode in our bank. We have onboarded 4.29 lakh CBDC customers and 62.93 lakh transactions done through the CBDC app till date. Further, mobile launched through corporate mobile banking app for the business people and we have added more than 99,000 customers on the app now. Almost all the digital lending platform, digital credit lending platform, we have brought the AI ML piece like PM Vishwakarma, Swanidhi, DG Surjaghar, and we are getting the good traction almost all the critical areas of the lending. If I touch the HR front, bank has adopted the new HR ecosystem driven by Project Udan, and in our bank, a lot of steps have been taken to bring the transparency in the transfer, in the performance appraisal, and overall in the ecosystem of the HR management. Last point which I would like to touch is that the officer or the employee who joins in our bank, their entire life cycle we are mapping up, and good leadership development programs are in place. International coaching federations, certified coaches are there. They are also giving coaching to our senior students of the bank. So a lot of improvements and things, the transparency which we have brought in the HRMS side now. Finally, if I can conclude, focus area of the bank this year will be on the customer centricity and enhancing the ease of banking for customers. Focus on ambience of branches and the ATMs, strengthening our presence in top 100 districts, having 66% of the CASA of the country. Focus on product and process improvements across the sector, strengthening market share in the RAM, boosting non-interest income, optimizing cost, strengthening technology and setting up efficient data analytics center, robust cyber security framework and making organization ready for ESG and climate risk. Compliance and good conduct will be the core for the growth. Transparency in human resources, which I have already touched, and maximization of recovery and preventing the fresh slippages. These are the core areas on which the bank is going to work in the financial year 25-26. Thank you very much, and I'm ready for any discussion or any question, any clarity. If any of the parameters, if it is required, I am there, and my entire top management team is with me now. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Maruki Adjania from Nuvama. Please proceed.
Yeah, hello, good evening, sir. Sir, I had a couple of questions. Firstly, if you see your slippage, then it's higher than what we've seen since Q1 FY24. So now will this be the normalized rate of slippage, or were there any one-offs? That was my first question, and I have a few others.
Yeah, good evening, madam. The overall slippages, if I can talk about, it is 0.73%. And the guidance which we had given for 24-25 was below 1%. So we are well within the guidelines. Of course, we have seen some slippages happening in the Q4, which is above normal. And mostly we have analyzed those slippages, and that has happened in the agri and the MSME segment. And in the agri and MSME segment also, the slippages which has happened, it is below 10 lakh segment. So we have strengthened our system now, and already in this particular month, April itself, we have made a recovery of around 288 crore out of those fresh slippages which has happened in the Q4. So I think definitely we will be maintaining the slippages ratio which we have given the guidance this year, that below 1% will be the slippages ratio. And the 3,000 crore slippages which has happened in the Q4, definitely that was an outlier. And going forward, we are expecting that quarterly our slippages will be in the range of around 1,500 to 1,700 crore.
Okay, sir. So, and my other question is that, a lot of banks have given many details about one big load transfer to NARCL. So how did that get affected in our books? What were the entries like ICICI, Axis? All of them have given details on how much has been reversed through provisions, if there was anything in interest income that has been taken, the amount, etc. So if you could just explain, because that's a lumpy account, right? And it's public, like everyone knows which account has been transferred to NARCL, that way.
Correct, madam. See what happened in the financial year 24-25. Through NARCL, we have made a recovery of 458 crore in the last quarter, and in the Q4, which is the account which you are talking about, and 863 crore total recovery which we have made through the NARCL.
Okay, but so that has been shown as a reversal of provision?
Yes, madam.
So, and has there has anything gone via the...
That is the reason, madam. If you see, our recovery in the technical write-off is in this quarter, Q4 is 1,800 crore. And if you see our recovery in the Q3, it was 763 crore. So there has been significant improvement in the TWO recovery in the last quarter. And it is because of that one big account recovery.
Okay, but that was, you said it's only 458 crores. That way, right?
Yeah.
So,
Yes.
Okay.
Correct.
Okay, and that has what has gone through the other income line?
Yes, madam.
And nothing has gone through the interest income line, right? NII line, right?
NII, the total, the NPA recovery through that NII route is around 700 crore.
Okay, and last quarter it was how much, sir?
Last quarter also, see, every quarter, around 600 to 700 crore, it goes in the interest income through that recovery channel.
Okay, sir. Sir, and I have just one last question on margins. So our margins did decline a lot in this quarter for reasons explained, right? But that there was a repo rate cut. But also, sir, the deposit cost has gone up a lot. Would that be because of your special deposit schemes? What explains the rise in deposit cost, like the deposit cost that you show in the present?
Yes, yes. I think that was one of the reasons. We had one special deposit scheme. But what I feel now with the declining scenario of the deposits and the credit, I think definitely the cost of deposit, which has already it is reached at the peak level, I think we are going to bring it down now, because already we have withdrawn that special deposit scheme which was there, and the different segment also we are going to revisit our deposit rate, and maybe some corrections we will be making in the deposit front. So I am expecting that from the Q3 onwards, definitely that impact will be visible on the NII and the NIM front.
Got it. But in Q1, it's likely that NIM can fall.
We will be,
that way?
will not fall. We will remain in the same level, because the deposit cost is almost bottomed out now. And the going forward, I don't see any rise in the cost of deposit. Rather, the deposit cost will come down. So Q1 mostly we will be at the same level, but definitely going forward, Q2, Q3 onwards, we see improvement in our NII as well as the NIM.
Okay, sir. Thank you. Thanks a lot.
Thank you, madam.
Thank you. The next question is from the line of Ashok Ajmera from Ajcon. Please.
Good afternoon, sir, and compliment to
Ashok.
Raji and the entire team of PNB. You are firing on all the cylinders because the business growth is phenomenal, 14% looking at if you compare with the other bank, and especially the credit and deposit growth, of course, which has led to the higher business growth. Your deposits are 4.47, which is, I think, growth is one of the highest. And even the credit growth also is 14.6%. Though in this quarter it is only 0.6%. On the whole, fantastic performance on all the fronts. Now, having said, most of the public sector bank also, including even State Bank, has also declared the result. And everywhere we have seen that there may be, first of all, they have moderated their targets for the credit. Like a bank like largest bank has also reduced the credit target from 14-16% to now 12% in FY26. You are going very strong. So going forward, sir, for FY26, and especially in this quarter, which is going to be a lean quarter. Even just now we finished Bank of Baroda analyst call also in the morning. So there seems to be some pressure, especially in this quarter also, the current quarter. So, sir, going forward, where do we stand, sir, in PNB? Because excellent performance, and I think all past legacy, all negative things have gone, and the banks has started performing very well on all fronts, sir. So this is the first question, sir, that how do you see going forward the business growth, deposit, credit growth, and from where it is going to come?
Thank you, Ajmera Saab. And if you can talk about the growth, see, credit growth already we have given the direction that 25-26 also we are going to grow at a rate of around 11 to 12% in the credit, and the deposit also around 10% growth which we are envisaging, and definitely we are going to achieve that. Rather, we will cross the projection which we are giving now. And why I am talking about the growth, the reason is that 1,15,000 crore sanctions are already there with us. There are disbursement which is going to happen for the loan sanction in 24-25 is around 85,000 crores. And in this financial year, like from 1st April till today, we have given a sanction of 28,000 in the corporate book. And this I am talking about the corporate book only, where we have given the sanction. And the 28,000 crore which we have given the sanction, that disbursements are also pending now. So I am expecting that 1,15,000 crore of sanction which is already there, definitely that disbursements are going to happen in the Q1, Q2 and Q3 onwards. Then there are another 21,000 crore of the new business group proposal, NBG we call it. Already we have given the approval, and for that we are waiting for the proposals to come, and then we will give the sanction. So we have 1,35,000 crore of corporate book in place, and I'm expecting with this, at least 50% disbursements are going to happen. With that itself, we will be able to grow at a speed of more than 10%. Now, second initiative which a bank has taken about the retail agri and MSME segment, and if you can recall that a lot of initiative bank had taken in the month of February. We had 6th and 7th of February, we had launched an outreach campaign for the housing loan and the retail activity. 13th of February for the MSME, and 1st of March, which we had done for the SHG and the agri. And all those things have done very well, and because of that, if you see, our RAM sector has also grown at a speed of 16 to 17% in different segments. So we are going to push this RAM segment very high now, and I think there also the growth in all the retail, agri and MSME, I am expecting that there will be a growth of more than 15 to 16%. So all things put together, I am expecting that the entire credit growth in the bank will be in the range of more than 12%.
Point well taken, sir. Sir, you are the master of recovery, especially in one of the, your parent bank. You did excellently performed. So on recovery front, sir, now normal recovery and recovery from return of accounts. Would you like to give some color on that for FY26 and especially in this coming 1 or 2 quarters? And coupled with the decision of the Supreme Court on Bhushan Power and Steel, how do you see it affecting those recoveries which have already taken place? And where do we stand on that, sir?
See, overall recovery in the Q4, if you see, we have more than 4,700 crore of recovery, and in that 1,800 crore has come from the technical write-off. And if you can recall, during the analyst meet in the month of last quarter, I had already indicated that there will be around 15 to 1,600 crore of technical write-off recovery will happen. And our overall recovery in the Q4 also, we had projected that 4,000 to 5,000 crore of recovery will happen, and that we have done it now. Team has made it possible. Okay. Going forward also, I can give you the color for that. Around 16,000 crore of recovery I am expecting in the financial year 25-26. In that, the technical rate of recovery every quarter I am expecting that minimum 1,500 crore will happen. So these are the projections which I am giving, and that is in line with the guidance which we have given to the analyst.
What is the total write-off book, sir?
Total write-off book, it is around 92,000 crore.
92,000 crore. So we expect about 6,000 crore. So about 6 to 7% of the total book, maybe 5.5 to 6.5%. That's very good, sir.
This is a minimum which I am talking about. That's the minimum recovery that is going to happen. See, this 91,000, 92,000, the book which we are holding it, in that there are very, very crude assets are also there where we are not going to expect much recovery in that. Yeah. See, there are things which has gone in the liquidation also. So all put together, it is 91,000 crore. So, but actual recovery which is going to happen is almost out of 50% of that only the recovery is going to happen. And there we are going to recover around 6,000 crore.
Yeah, so 10%. Yeah. So, sir, next is on the NARCL. SRs issued by NARCL, which is government guaranteed. Now, as per RBI directive, you can value it at the fair value. So, how much profit have we taken on that on SRs issued by NARCL till date in the last quarter?
Yeah, it is around 1,200 crore.
Which has gone straight to the bottom line, sir.
Yeah, and that has been neutralized with the MTM which we have done in the treasury.
Okay. So earlier, whatever MTM was done. Yeah. And last question, sir, in this on the treasury front, now since the treasury is giving phenomenal income, and now also at least 2 rate cuts, everybody is agreeing up to 50 basis points coming from RBI. So going forward, we will have a phenomenal, tremendous income from treasury book. So any color on the treasury operations for FY26? And with this kind of windfall which will come in, how do you look at it, and how good it will affect the profitability?
I think, understanding the rate transmission which was going to happen in the month of March and the June, we have built up a good treasury book now, both SLR and non-SLR book also. And we are going to get good dividend out of this investment which we have made in the treasury now.
And sir, how much M2M profit has gone from the AFS book, which has gone directly to the reserve?
You have that data? Just 1 minute. Our CFO is here. Yeah.
No, he's talking about the original valuation we have done.
Mark to market profit from AFS book, which now as per RBI valuation norms, revised valuation norm, goes to reserve, AFS reserve. What is that figure?
Yeah. Just 1 minute. We'll give you.
So we have created two things. One is about the general reserve, which is 2,098 crore, and AFS reserve we have done 379 crore.
379.
How much, sir? Will you repeat that second number, sir? 300?
Number is 2,098 crore in the beginning at the time of transition, and for during the entire year we have done in AFS reserve 379 crore.
379 crore
for the entire year.
Okay, sir. Okay, sir. Thanks a lot. Any time permits, I will come back again, sir. Thank you, sir. Thank you, and all the best, sir.
Thank you. Thank you, Anjana.
Thank you. The next question is from the line of Jay Mudra from ICICI Securities. Please proceed. Hello, sir.
Hello. Yeah, hi. Am I audible now?
Yes, Mr. Jay.
Yes, hi. Good evening, sir. Sir, I wanted to check what is the amount of wholesale deposits that we have?
Willful.
Wholesale deposit.
Wholesale deposit, sir.
Wholesale deposit.
Yeah.
Okay. The total amount is, that is more than 3 crore.
More than 3 crore. वाला कितना है? 5194.
2,80,000 crore. Yeah, including CD, it is 2,80,000 crore.
Right. So, sir, in your entire deposits of 15 lakh crore, right, roughly, we will take, let's say 3 lakh crore is such which will reprice on a faster basis, right, which is only 20% of the overall deposits. Whereas on your loan book, you have very high proportion, which at least, let's say the loans which are linked to EBLR and T-bill, which is roughly 50% or over 50% book, which will reprice or which have already started repricing. Right. So in that context, you could have significant margin pressure, right? I mean, this quarter margin, I mean, the margin for this quarter ending is 2.81 global margins, and we are saying that full year we should be around 2.8, 2.9. So it looks like that may be very optimistic aspirations.
The total term deposit also which we are holding it, there is a percentage of the deposit for more than 1 year is also not very high. So we are expecting that the deposit which is there for 3 months time, most of our deposits are in the range of 6 months to 9 months. And that is the reason I am telling also that our pressure on the cost of deposit will bottom out, or it will come down from Q3, Q4 onwards. So till Q2, definitely there is going to be some pressure, but at the same time, the cost of deposit which is there as of now, that is not going to be up now, because that is the highest level we have reached now. Now, under no circumstances, this level is going to up, because the deposit rate scenario is already it is down now, and we are expecting that whatever the new accretion that is happening in the system, that is far below the rate which we were prevailing earlier. So keeping that in mind and the long-term impact of the deposit which is there in our system, I don't see that in the long run we will have any pressure on our NII and the NIM.
Okay. So, sir, actually, let me ask you, we have already passed on the repo rate cuts, right? I mean, so this quarter till March end, you would have passed on some impact of the Feb 4 repo rate cut on the loan side, right? So now, sir, let us say if in cumulative there are 100 basis point of rate cut, what is your sense that your yield, your blended yield on advances, how much should it decline? Should it decline by, let's say, 60 basis point on a, let's say, from fourth quarter to maybe fourth quarter? By that time, 100 basis point, so 100 basis point of repo rate cut, what should be the blended decline in your loan yields, assuming everything is more or less static?
I think we need to go deep into that, and we need to do some calculation for that, and generally I can throw the figure to you, because we will have to factor those things, and generally we can calculate. So I think we can discuss with you separately, and we can give you the entire calculation. What are the RLLR is there, MCLR is there, and how it is going to be if the further 50 basis point rate cut happens, how it happens now. I think we can have one-to-one discussion, and I can share all those details to you.
Sure, sir. And sir, is there any strategic discount that you offer to your customer, which contractually you can reduce that? Is there such mechanism, or you think more or less the EBLR linked loans will have a complete pass through?
No, I didn't get that question.
So let's say I'm saying, sir, on your loans which are linked to EBLR, so far RBI has cut by 50 basis point. Let us say RBI also cuts by another 50 basis points. So there is a 100 basis point cumulative cut. Do you have any contractual mechanism wherein you may choose to pass on only 75 basis points, saying that you are increasing the spread or you are reducing the strategic discount that you would have offered to those customers? Or it will be simply more or less 100 basis point pass through to at least to the EBLR customer. MCLR and all those things may change.
See, more or less where it is straight away the rates are fixed with the EBLR, definitely we need to pass on when we are passing on that benefit. But there are certain schemes in the retail segment like housing loan is there and vehicle loan is there, where we have given some strategic discount. There we can revisit if the further rate cut happens. Then a strategic discount which we have given because of some campaigns we are launching it. So we are giving further discount in our RLR. There we will revisit and we will find out what best improvement can be done now. But wherever the straightaway methods are there, where RLR based the lendings are there, definitely when we are reducing the because of the repo rate, we have to pass on this benefit to all these people.
Right. Understood. And lastly, sir, I could not understand this security receipts treatment. So we had 1,200-1,300 crores of security receipts which were, above the book value of 1,200-1,300 crores. So that should have been in P&L, right? You said that you have neutralized that gain by MTM. So if you can just explain.
Ask my CFO to explain it to you.
Ji, I think you are correctly observed, but we have taken the entire benefit of this in the revaluation of this entire SRs. We have either released the provision or we have revalued the NAV value. So this amount is 1,326. But what impact we have done, we have another securities where we have some MTM losses as well. So those we have provided, especially one of the big investment we have. So the net result is reflected 182 crore positive in the P&L, sir.
Okay, understood. Thank you and all the very best, sir. And I'll engage you, sir, on separately for this yield sensitivity.
Definitely, this we will come out. Yeah.
Thank you. The next question is from the line of Kunal Shah from Citigroup. Please proceed.
Yeah. Hi. Sorry. So again, to clarify on this SR, this 182, which is the profit on revaluation of investments, that is the net amount which is getting reflected after 30 crores of credit coming from the government guaranteed SRs. So there would have been some knock of 1100 odd crores which would have been taken, 1150 odd crores on M2M on other SRs. So that's right?
Correct. Yes. Yes. Absolutely right.
Okay. Okay, perfect. Got it. And secondly, coming on to this deposit question again. So you mentioned like this were largely the special deposit schemes which have now been withdrawn. But what was the tenor of these deposits? And I think maybe just prior to the rate cut, we have contracted them at a very high rate. So what is the average tenor of particularly the special deposit schemes, special deposit rates which were offered? Yeah.
It was 400 days deposit.
So that will at least take like 1 year to reflect.
Yes. That's the reason I'm telling that impact of this rate cut in the deposit will take at least Q3 onwards, Q4 onwards, only we will see the impact.
Yeah. Got it. But still, like maybe for 400 days, so it will be almost like more than a year. And given that this was on for almost like last 4 months, it will take a slightly longer period as well. Yeah.
Yes.
Yeah. And getting on to the SME slippages as well as agri. So no doubt you indicated, but there is a sharp increase which is there in both of that when we look at it on a 9 months and the full year number. Particularly agri also a sharp rise in SME. These are like less than 10 lakh rupee loans as you indicated. But any color in terms of where this is flowing from? Is it like the area of stress and the initiatives which we are taking to manage this going forward, and this will not repeat, or this will be contained at the current level?
No, I'm very confident that the level which you have seen, I think that is the maximum level it has touched. It don't cross the limit which is happened in the Q4. Because in agriculture, if you see the March quarter itself, it was 1,400 crore. And that is the highest it has happened in the last 1.5 years. And there is
which product segments, particularly this 1,400 crores, which like within agri, which is this product segment which is contributing to the maximum pain?
These are all the KCC loans, and in that there was some repeated restructured loans were also there. So we also didn't allow to do anything in that. So we allowed to flip it, and then we can do the recovery measures also. And in the first month of the 25-26 itself, we have made a recovery of around 288 crore. So, and that is the highest level it has happened. It is not going to happen in the Q1 or Q2 onwards now. And this quarter, I have already given the direction that it will be around 1,500 to 1,600 crore will be the total slippages in going to happen now.
Okay. Got it. Perfect. Yeah. Okay. Thanks and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Vinit Jain, an individual investor. Please proceed.
Hello.
Yes, Vinit.
Good evening, sir. सर आवाज आ रही है मुझे?
Yes. बोलिए.
सर जो भी मैं आज भूषण स्टील का जो सुप्रीम कोर्ट ने सर डिनाइल किया हुआ है JSW स्टील में जो उसका एक्विजिशन किया था, सर उसी के बारे में मुझे जानना था सर. उसका सर क्या इम्पैक्ट रहेगा सर PNB के ऊपर? मतलब हम Q2 या Q3 में उसको सर डिस्काउंट करना पड़ेगा जो भी हमने NPE में हमने कवर किया हुआ था सर, उसके बारे में जानना था सर मुझे.
नहीं, अभी तो इसके ऊपर 2-3 दिन के भीतर जितने भी लेंडर हैं, अराउंड 32 लेंडर्स इसके भीतर हैं, तो वो सारे लेंडर्स COC की एक मीटिंग होने वाली है 2-3 दिन के भीतर. एंड देन फ्यूचर कोर्स ऑफ एक्शन जो भी दी लॉ ऑफ द लैंड है उसके भीतर जो भी सोल्यूशन है हम इसके ऊपर विचार करेंगे, एंड जो भी बेस्ट सोल्यूशन होगा उसके ऊपर हम काम करेंगे. एंड द एसेट इज इन द वर्किंग कंडीशन. आई डोंट सी एनी चैलेंज इन द फ्यूचर ऑल्सो एनी रिकवरी मैकेनिज्म.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Ashlesh Sonje from Kotak Securities. Please proceed.
Hi, sir. Good evening. The first question is on asset quality, especially on the recoveries part. You indicated your guidance for a recovery amount of about 16,000 crores for next year, against a recovery of about 14,300 crore, which you have done in this year. So what changes next year, sir, that you are confident about a higher recovery?
See, one thing which is, if you can see in the recovery in the Q4, where we put a lot of focus and the drive happened across the bank, and we have seen the recovery of 4,700 crore, which is highest in all the 4 quarters. In the recovery under the technical write-off itself is around 1,800 crore. So that gives a lot of strength to us, that is, if we can put focus, and the head office and the circle office and our general office, if they start monitoring the account on a regular basis, connecting with the NPA borrowers, I think definitely this number is achievable and we are going to achieve that.
Okay, and you're just a follow-up. You are not assuming any big chunky recoveries from here, right?
Chunky assets are not there now. I think all the recovery will be in the range of around, smaller accounts, definitely there are a lot of plenty of accounts are there, and around in the range of around 25 to 50 crore, plenty of recoveries are going to happen.
Okay. So secondly, on the margin front, on the housing loan front, you seem to be growing that book quite well. And it seems like PNB is offering a rate of interest of about 8%. Given the expected pressure on yields due to the repo rate cut, is it possible that you might consider a hike in the interest rate on the housing loans?
This rate, as of now, what we are giving, will continue for that, and then we will see what further repo rate cut happens, and then the discount which we have given over the RLLR. I think we'll revisit that. We'll see that. As of now, we don't have any plan to do that. See, housing loan generally we give this rate with a provision that the team of our bank will connect with the people, and along with the housing loan, a lot of other things also come into kitty. Their personal account also come, and once that personal account comes, then a lot of other lending activity also happens. So this is not the standalone we should see the interest rate in the housing loan.
Just one clarification. When do you expect the MCLRs to decline for the bank?
MCLR, one cut we have already given, and 10 basis point cut has already happened.
Okay, sir. Perfect.
That is from 1st of May.
Okay. Sir, sorry. Yeah, sorry. One more question. On the tax rate change, when do you anticipate that? Anything in the pipeline?
Which one?
On the tax rate.
Which one? Tax
shift
rate.
To the new tax regime. Yeah.
This financial year, definitely we are going to adopt the new tax rule now.
Okay, sir. Perfect. Thank you.
Mostly by Q1 or Q2. By Q2, definitely the new tax regime will be in place.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Rakesh Kumar from Valentis Advisors. Please proceed.
Yeah, hi. Thanks, sir. So a couple of questions, sir. Firstly, you were discussing on the deposit cost number, that, there is an acceleration because of a special deposit scheme. But if I look at your reported deposit cost number, it was close to 5.1% in first quarter. Increase was 8 bips in the second quarter and then 6 bips. And then all of a sudden in this quarter, 12 bips. So it doesn't seem that, it is just because of, a special deposit scheme what we had and what stands withdrawn right now. But still we have seen 12 bips increase in the deposit cost. So is that there is a large, mobilization that we did in third quarter? Is that the reason? Or there is some other reason why the deposit cost has increased by around 12 bips this quarter?
Yeah, that is also one of the reasons. There was some bulk deposit and the CD was mobilized in the third quarter, and that impact also we have seen. but we have reduced the CD in this particular quarter. Almost around 10 to 12,000 crore of CD we have reduced in this particular quarter itself. And that is one of the reasons, if you see the quarter-to-quarter deposit growth is slightly lower than the earlier quarter now. So we are mindful of taking the deposit at a reasonable cost, and I don't see going forward any further increase will be there in the deposit, cost of deposit.
It looks very contrary, sir, that, we have a credit growth of 0.6%. There is no credit growth actually in the, domestic credit growth on a sequential basis. And as you said that, we have kind of ceded some, high cost